Greetings to you, traders, and trust you all are doing good today. All right, so this morning we bring you another video on GBPUSD. So we are going to be going down, giving you guys what is going on in the market. So basically, you know how we do our analysis. Basically, it's just going from higher time frame down to the lower time frame, and the only thing we are actually doing right here is gathering enough data. Okay, before we hit the button to buy or to sell, we need to understand what is going on in the financial market, right? So join me as we analyze this market together and understand what is going on. So the first thing is to, whenever we are on the weekly time frame like this, we always want to understand the directions of the market. You know, we only have three directions, right? Which is the uptrend, the downtrend, and the sideways, right? And this is a very good example of an uptrending market because why? Price is actually heading to the upside. Now, you know, we've actually observed that the market is trending to the upside, which means the buyers have been gaining control since a very long time. And another thing is that, you know, we have what makes up a trend, which is this impulsive move, and we have this corrective move, we have this impulsive move, and we have this corrective move. Now you can see how long this market has been making this correction, which is from last year, November 2024, price has been depreciating in value, right? So basically, this depreciation is all for the correction, right? Price is actually making the corrective phase, right? So another thing we need to pay attention to is the candlestick formation. So the way I analyze the market, I put so much focus understanding the candlestick formation, right? Because candlestick formations are very important, especially on the higher time frame. Okay, I really do not use candlestick formation on lower time frame based on the noise between the buying activities and the selling activities, right? So now you can see that here we have, last week we had a very strong bullish candle, right? And you can see that if you look at the price action within this market, the sellers have been gaining control, right? Sellers have been gaining control since last year September, and you can see that we only have few amounts of bullish candle. This is just to show you how the amount of strength in the selling pressure, right? So it means that during this period of downtrend like this, we are going to make more money from selling, right? But now, if you look at last week really performed well because we had a very significant bullish candle, right? And if you look at the previous week before last week, this was on the 13th of January. If you look at the candlestick, this is actually like an indecisive candle happening around the support region, right? So this could have actually given room for the bullish candle because, you know, when we have both buyers and the sellers already on the equal level, then we don't really know the outcome that is going to be on the following week. So it could either going to be bullish or to be bearish. But as you can see, last week was actually influenced by the buyers. You can see the amount of pressure. In fact, we can find little to no weak. If you look at the bottom, there is no, I mean, there is only few or small weak around the support, right? It means that immediately the market opened on Monday last week, or Sunday last week, because market opened on Sunday and closes on Friday. So immediately the market opened on Sunday, the buyers have been kicking in and they have been buying and buying up until the end of the week, market weekdays, which is on Friday. And as you can see, we had this high, which is where the buyers got the market to before sellers came in, and you know, they just a few minor selling activities that, you know, made the price to close around that level. Okay, But you can see now that this week already, price is actually giving us an indecisive candle, right? You can see what the market is doing. This is like a doji, okay, where we add a cross like this. I'm sure you guys already know what this indecisive candle is, right? So now, what this is actually giving to us is that since we had buying activities last week, I mean, the market should, or the buyer should also continue the trend this week, because we had a lot of buying activities from last week. So the buyers is, of course, should gain control in the market this week as well, right? But as you can see, this is just uh, the struggle between the buying activities and the selling activities. So there is no much significant movement. The buyers took the market to the upside, the sellers also took the market to the downside, and now the price is within the two, which is at the middle, and this is the reason why it is an indecisive candle. So if at the end of this week, today is Thursday, so if at the end of this week price close with this candle, which is a doji candle like this, then we might actually have a significant move to the upside. So that depends on the price action that is going to be showing on the lower time frame. So this is the purpose of we actually having an idea of the multi-time frame analysis, going from the higher time frame down to the lower time frame. All right, so now the next thing for us to do, we've actually marked our structures, which is our previous high and the previous low. So we've marked this level, which is our previous high. This is also going to be our previous low. So all those levels are very, very important, because whether we like it or not, this is a downtrend, okay? Because by the time we navigate to the next lower time frame, we are going to see a lot more of those downtrending activities. So right now in a downtrend, we also have the impulsive phase and the corrective phase. So here we have impulsive, corrective, impulsive, corrective, impulsive, and corrective. So basically, the trend is actually made up of this impulsive phase and the corrective phase. And if you look at this downtrend, we actually have the impulsive phase and the corrective phase, impulsive phase, and currently now the market is making the corrective phase. Now the correction can actually extend within this level of support to this high of resistance. So it means that price can actually keep on navigating to the upside like this until you get to this level before coming to the downside. But for no reason should the market break the resistance, because it is actually invalidating the trend. Now, if price breaks the resistance, it means that there's going to be, what do you think? A change of trend, right? So there's going to be a change of trend. Now, this change of trend is just going to be a form of continuation move to the upside, which we have our impulse right here, correction, impulse right here, this is a correction, and then you can see we have the next impulsive phase to the upside, right? So this is actually what we are expecting. I mean, we're just still anticipating this corrective move, right? So if we head down to the daily, so right here on the daily, you can see that we have a more clearer picture of what is going on. We have this impulsive phase correction, impulse correction, impulse, and here we have the correction currently in motion, right? So the correction is actually active at the moment. And if you, so basically when I was talking about candlestick formation, I actually pay much attention to candlestick formation on both weekly time frame and on the daily time frame. And you can see on the weekly we had the last week candle being bullish, which means for the last week trading activities, which is from Monday to Friday, the market was influenced by the buyers. And right here on the weekly, you can see the last day candle, which was yesterday candle. You can see what we had. This is the yesterday candle. So this candle actually shows that there is going to be a significant amount of buying activities, because the sellers, I mean, there were actually few selling activities in the market, but the sellers do not really have enough strength. They don't really have the power to hold the price around this level of support. Okay, they do not really have the strength to hold the price around this level actually. Okay, so this is actually what it means. So since they don't really have the power or the strength to hold the market or to hold the price around that level, then guess who came in? The buyers actually came in and they took the price to the upside. I mean, this is just like a struggle, and this is actually what the market is. So basically it's like a war between the buyers and the sellers. So if one is not taking control of the market, the other is going to get on board and then they'll ride the trend, right? So this is actually, we observe this market activity, this candlestick formation, and we notice that there might probably going to be further buying activities. Now you can see that this is actually conforming with the weekly, where we had the whole activities right here is price still giving us a correction, right? Because if you look at it now, everything in this upward movement is all correction. But by the time we get to the 1 hour time frame, it's going to be a whole uptrend. So we just need to understand this scenario. Okay, so right here you can see this market is making a correction, as you can see, and this is an uptrend. Although it might not seem like an uptrend on this time frame, but by the time we get to the lower time frame, like the 1 hour, we are going to see the trend on a bigger scale. Okay, so now let's go to, so we've actually marked our structure this for this downtrend, because this is a downtrend. This is the previous correction, right? And if you guys remember, this was the previous high we identified on the weekly. So that is so right here we have a whole new trend, right? So it means that if price breaks through the resistance structure, then this downtrend has ended, and it doesn't really mean that the whole trend is going to end. This is just this particular one right here that is going to have exhausted, and now we are going to, this whole correction is now going to extend more to the upside, so something like this, right? Before we now have the next impulsive phase as we have conducted on the weekly time frame, right? So you can see all of these activities is just giving us an important information on what is going on in terms of price action, right? So these are very, very important, right? I believe these are very, very important, and it's something we all should know. So the next one right here is on the 4 hours, and as you can see right here, you can see that this is a whole trend that I basically was talking about. This is a whole trend, right? It might not even seem like a bigger trend right now, but when we get to the 1 hour, we are going to see how big it is. So basically right here we have our impulse right here, we have a correction, we have this as an impulse, and this is the next correction right here. So right now you can see that this correction is what is active at the moment, and we don't really want to go against the trend, because basically the old trend is giving us an upward direction, and as I get to the lower time frame, I basically don't want to be going against the trend. So I would actually want to wait for the trend, the whole correction to exhaust, then I can actually ride the trend. If you look at this correction right here, right, this correction, basically imagine trying to sell within this correction. You can see how short this correction is, right? So the most important thing right here, or what I'm just trying to say, is that patience is the key. So even if it's going to take you 2 days, 3 days, 4 days for you to wait for the right moment, then it is always going to worth it, right? So basically the trading activities here is just saying that in the market, 80% is 80% goes for waiting, and the remaining 20% goes for buying and selling. Okay, so right here you can see we have a correction, and you can see the correction is actually active, and now we are getting to the point where we are going to start figuring out where to get into the market. And now this is 1 hour, as you can see. So you can see the 1 hour time frame. You can see that we have a whole bigger trend. So this is what I'm trying to talk about. You can see this is a whole bigger trend. This is a whole big uptrend. and nobody would know that this uptrend was actually a correction on the higher time frame. So this is the reason why, multi-time frame analysis is way very unique and very important, right? And as you can see, we actually if you guys were in our if any of you guys are in our Telegram community, we actually took these buying activities to the upside, and this actually gave a whole good profit. You can see the amount of movement, and this is just the whole price action that we're able to carry out from the higher time frame down to the lower time frame. So you can see all what we are just doing right here now is just gathering data information that we can use. Before I click on the buy or click on the sell, there must be a good reason for me to do all of those activities. So this is the point, right? We don't just want to buy randomly or sell randomly, right? That is not a good trading activities, right? And as you can see, this is actually a correction, and within this correction we also found a pattern. I don't know if you guys can see this, but this is actually a an inverse head and shoulder pattern. This is the head, this is the left shoulder, and the right shoulder is currently making its way to the left. It's already around there. So it means that this structural resistant level, right, is going to be a good way to get on the market once we have a break of the structure. So I'm actually giving you guys an important tip right now, which if you guys want to follow this trade, then it's not a problem. You just have to get it added to your watch list, and you also have to be monitoring it. And at the same time, if you don't want to miss any of those trading activities by optimal traders, you have to join our Telegram group, and there we are going to be giving you guys updates. We're going to be giving you guys tips on how to trade profitably. Okay, we are going to be expecting you guys on the Telegram channel, and we also welcome you as you join. All right, so this is actually what we are expecting in the market, right? This is inverse head and shoulder pattern. It can actually move the market to the upside based on our key analysis that we had from the weekly time frame. Last week was bullish. It means that this week might probably be bullish, but right now the market is actually forming an indecisive candle. So it means that even if this week is indecisive, so which means this will close with a doji, then it means that from next week we might actually see some significant bullish movement based on the confirmation we've been having from the weekly, daily, and the 4 hours, and right on the 1 hour, which gives us a confirmation that buyers can actually kick in and they can move the trend to the upside. So all of these are actually working together to give us a whole good profitable or high probability trading setup. Okay, so basically what we are going to be waiting for is actually a break of the structure resistance. Okay, I hope this video was very helpful. If it was, kindly give us a like and also join our Telegram channel, and at the same time also help us to subscribe to the YouTube channel, because this is actually going to help us to add more videos like this. We are going to be coming up with different kind of videos that would actually help you to understand and at the same time help you to navigate the financial market. All right, thank you. I should do that, and God bless you. Have a wonderful day, guys.